Despite negative fundamental factors and rising global tensions, the need for a local correction turned out to be much stronger. Thus, after rising by more than 10%, oil prices posted slight losses. One of the main reasons for this local pullback was the lack of any statements by European Union officials on hostilities in Ukraine. The main thing is that there were no comments on a possible embargo on Russian oil and the gas supplies. This somewhat calmed the market and paved the way for the long-awaited correction. In addition, oil is coming under pressure from the epidemiological situation in China, which only continues to worsen. Nevertheless, the looming threat of energy shortages is expected to provide support to the asset and prevent it from declining in the long term. From a technical point of view, Brent crude oil futures entered a technical correction following a short-term stagnation around the resistance area of $115 per barrel. As a result, the asset lost about 5.5%, which is considered a fairly strong price change in such a short period of time. In this situation, oil is still in a correction phase despite the local oversold status. To resume its bullish run, the quote first needs to consolidate above the $110 mark on the 4-hour chart and then break through the resistance level of $115. The lack of statements by European Union and United States policymakers on the situation in Ukraine had a devastating impact on gold, whose losses turned out to be even steeper than those of oil. It seems that there will be no tighter sanctions, at least for now. This means that uncertainty is subsiding. So, if the situation remains unchanged, gold prices may well return to the range of $1,920 and $1,930 per troy ounce. Nevertheless, amid rising concerns in the market, one careless statement is enough for the asset to jump to $2,000 per troy ounce. If the price fails to fall below the $1,940 mark on the 4-hour chart, its downward cycle may slow down and then turn into a gradual recovery. Meanwhile, the Russian currency appears to be rather stable. The ruble has been trading around 80 rubles per dollar for a few days. For the most part, the quote is moving slightly below this level. Notably, despite the lack of statements by the European Union and United States officials regarding the intention to tighten sanctions, the ruble is not gaining value. This indicates that the ruble's upside potential has been exhausted, at least for now. Moreover, its regular advance above the 80 mark points to the need for a local correction. In other words, the greenback has every chance of rising above 80 rubles in the short term. And that's all for now. We continue to learn developments on financial markets. Subscribe to our channel and follow news with us. See you soon.